The infinite banking concept is old school, whole life, done poorly. You need a real financial advisor, not an insurance broker that's trying to sell you a load of manure. Pisses me off, infinite banking my butt.
If you're buying life insurance, you've seen infinite banking, you've seen the pros, the cons, you're comparing videos, sit down with a professional that can properly structure a policy for you, decrease your cost of insurance down to the IRS legal amount to maximize wealth building so that policy works better for you. Because in a nutshell, guys, this is how it really works. An IUL takes your cost of insurance and keeps it low in early years. If you can fund that policy correctly and maximize that bad boy, here's what happens. That compounding growth tied to the performance of the S&P 500, which me, Dave, we all agree will always grow, you can't lose. How's it going, guys? Chris Hart here, Sold Out Servant. Today's reaction video, we'll be watching this video from a guy named Dave Ramsey. You probably see him, Financial Peace. If you're in church in America, you've probably been to a Financial Peace seminar where you learn about how to budget, how to save, all that great stuff. I believe in about 85% of what Dave Ramsey preaches, but I don't believe in his concepts around life insurance. He claims that infinite banking is a scam. Go take a look at this video today, guys, and watch and see, is it a scam? Is he right? Are there some holes in his defense? Let's check it out.
That you're borrowing your own money and you're paying them interest?
Yep.
This is infinite banking for them.
Yeah.
Yeah, the infinite banking concept is old school, whole life, done poorly. You need a real financial advisor, not an insurance broker that's trying to sell you a load of manure. And so, yeah, the other thing is that your cash values that are sitting there all die with you. So whatever cash you put into this is equals zero at your death because they only pay the face value.
First of all, he's wrong there.
Oh, hell no.
Crazy. You look at life insurance. Obviously, he's describing probably a whole life policy with no increasing death benefit, no option to. I'm not trying to get into the details here, right? I'm a life insurance agent. I don't think Dave Ramsey is. He may be licensed. I'm not sure. But in a properly structured IUL, an overfunded IUL concept, he just said that, hey, when you pass away, they keep the cash in the account. Every dollar paid into the policy plus the death benefit both go to your loved ones. And so, nothing against Dave Ramsey here, but if I'm watching Dave Ramsey and I think his word is gospel, what he's saying is true, I'm following that, right? But it's incorrect.
True does not have a policy. Northwestern Mutual does not have a policy that pays more than the face value except Universal Life Bs, which are not in infinite banking products. And Universal Product B is where they charge more than they usually charge, which basically buys the insurance so they can still keep your money, is the way the math actually works on this.
Again, he just said that there, right? So infinite banking concept. So he's saying you cannot use an infinite banking concept with an IUL.
That was a lie.
He mentioned that it'll cost even more. What's crazy is that cost of insurance is lower if an IUL been properly structured. But again, looking at this breakdown here, he's not really giving us details. I think if you're looking at life insurance for yourself, sit down with a professional that can break down and show you with the numbers how it can benefit you.
Yes. So you're dealing with one of the most expensive insurance products in the marketplace. If you're dealing with either one of those two companies, I would stay completely away from both of them. They're everyone in the financial field except people that work for them, we all think they're a joke. All of us. Anyone who's academically trained or has any kind of CFP or anything else, when someone says they work for Northwestern Mutual, we just kind of laugh and go, yeah, right, you screw people every day.
I would say from a cost perspective, Northwestern Mutual's policies are normally expensive. They do cost quite a bit. I wouldn't say that they're bad. I wouldn't say they're bad at all, but there's a point that he's making about the cost of insurance, and not to get into details on this video here, but there is a higher cost of insurance associated with most policies when it comes to Northwestern Mutual and New York Life.
And you need to go get a real financial advisor that can help you do some real investing that takes into consideration your low risk tolerance. Low risk tolerance does not need to lead you to losing your money 100% of the cash invested at death.
Yeah.
That's a bad risk tolerance thing. So you need to move on, dude. You need to move on. But because the whole thing of the dividends are paying for it is such a joke because the dividends are the refund of a deliberate overcharge. So who's paying for it? If you were getting dividends if you owned Home Depot stock and you got dividends from that, then Home Depot's making a profit, but they're making a profit off of their customers.
Yes.
And I'm the owner of the investment. I get that dividend. That's different than if I am the customer and I'm the stockholder. Thereby, the only way I made a profit was off of me.
Myself.
So I pay you an extra $100 and then you give me 70 of it, and I'm supposed to feel great about that.
Right. Yeah.
So that's what this amounts to. And so you guys that working with State Farm, when you get your little dividend check, that's what it is. It's the refund of a deliberate overcharge. IRS verbatim says that.
Yeah.
And that's why you don't get taxed on it. If you get a dividend on Home Depot stock, you get taxed on it as income because it's real income. You really made an investment, and then you really made an income.
So right now, what he's describing here in the whole life policy, he's saying that there's a dividend paid out based off the performance of a mutual company, right? So if you're Northwestern Mutual, you are the product, right? You're the customer. You're not Home Depot. So you're the customer. You're paying for a policy, and they're overcharging for a policy. There's a profit there. That profit is given back to you through a dividend. That's what he's saying. Now, nothing against these whole life policies. I don't do that there, right? I believe in something called an IUL, an Index Universal Life Policy, where it's a little different, where it says, hey, the performance of this IUL is not tied to a dividend or the performance of National Life Group or of maybe Nationwide Financial or AIG or John Hancock. A lot of companies do this here. It's saying, hey, it's tied to the performance of the stock market, the S&P 500. So in my IUL, my caps 10%, my floor is 0. So I have a much higher growth potential than a whole life policy, but no guaranteed dividends. But based off the performance of the market, because I know that Dave believes in go term invest the rest. So he believes that the market will grow. If I can properly structure a policy that says, hey, let's keep your cost of insurance as low as possible, right? That's overfund the policy. That's max funded up to the modified endowment contract, the MEC that the IRS allows. I can now say, hey, let me use this policy. Let's leverage what the market's doing. Let me get 9% growth, 8% growth. Some companies offer a guaranteed bonus. It's a different level of the level playing field when it comes to IUL. But again, of course, Dave is not breaking down IUL. He's breaking down a whole life policy.
Thing in the life insurance world based on dividends. You look at the price, look at the structure of the policy, and you'll usually find that mutual companies, by the way, are the higher priced.
Yeah.
Guys, you just said it. Look at the price. So if you're buying a policy, you own a policy, you're watching this now. Stop.
5 hours later.
Own a policy. You own an IUL, a whole life policy. Look at the cost of insurance. How was it structured? Do you know what you're paying for insurance? Think about that for a second. If you're paying $200 a month, $300 a month, $400 a month for an insurance policy, what's your cost of insurance? There's some truth to what Dave is saying here, 100%. So in a properly structured insurance policy that's being structured to maximize wealth, to maximize the growth, to minimize the death benefit, there should be a much, much, much lower cost of insurance than what you see in whole life. Again, the challenge is this. Most of us out there who are buying policies have no clue we're buying. We're not really educated. I mean, even someone as educated as a Dave Ramsey probably does not truly understand what a properly structured IUL looks like.
Service, like a Zander Insurance, and you get quoted on term life insurance, you're going to find no mutual companies in the 42 different companies that they give you a quote from because they're not competitive.
That's it.
Why? Because they charge more so they can give some of it to you back later and make you feel like that you got something. That's really what it amounts to. And that's why you won't find them. They're not competitive.
Yeah. Dave, you're fired up about this one.
Man, I tell you what, pisses me off. Infinite banking my butt.
Okay, Dave.
Infinite banking is for them.
Yes.
The only thing that agent has for his whole life is a need for your commission to be paid to him.
Big point. Infinite banking's for them. Whole life. If I'm a life insurance company, how do I get paid? Selling you life insurance. So follow me for a second. I get paid to sell you life insurance. So if your agent says, hey, let's decrease your death benefit to the lowest legal possible amount. Let's decrease the amount of life insurance you have. What is that agent doing? Decreasing the cost for you, decreasing the profit for the insurance company, decreasing their commission. Now, why would an agent do this? Because this agent is saying, hey, I want to build a policy for you that benefits you. Now, every agent won't do this because obviously it cuts their commission. But if I'm you, look at what you currently have, because he's got a point here, because IULs are structured differently. There's no benefit I'm saying there's no benefit to your insurance company to offer you a lower death benefit and maximize your wealth. They don't benefit from that at all. They benefit from selling you more coverage. So it's really about the verbiage and the structuring of a policy and your insurance agent being educated to understand how that works.
Paid to him.
Absolutely.
That's the only whole life thing that is involved here. These products are horrendous.
Yeah.
And it's bad enough when they feed on the middle class, but that guy's a baby step 7, man. He's probably a millionaire.
Yeah.
And they create such a jumbled word picture that you can't cut through the BS. And yet, the thing about him, did you notice what happened with him? This is interesting. It didn't feel right to Jason.
Yeah.
He felt it, didn't he?
Yeah, he felt it. And that's probably because he's going through our process and he knows what we teach.
Well, it's not just that. He didn't just say, well, Dave says it's wrong.
Right.
There's something wrong here. I just can't put my finger on it.
Yeah. Overpay and get money back.
But, I mean, you ever have those feelings? I don't know exactly what's wrong, but I smell a rat.
Yeah.
Which means there's a dead rat in the corner somewhere.
Yes.
I just hadn't found him yet.
Or below the couch.
Something stinks in here.
Yep.
Something stinks in here. Something got in the house and died. I got a smell in here. What is it? Something's wrong. You can't find it.
Yeah.
You can't put your finger on it. But how many times have you been in a situation with a person or with a product, a financial product? You had one. You were buying an item. I won't say what it was on the air, but you got the smell off the people and you ran. It wasn't 3 weeks ago.
What was it, Dave? Tell me. You got to have What was it?
I'm not going to because they might be listeners, and I'm not going to do that to you. I'm not going to throw you under the bus.
No,
but
say
you
it.
walked out of a deal into a different deal not long ago.
Oh, yes, sir.
And
did.
Was it not the same thing?
It was the exact
the Holy
same
Spirit
thing.
inside of you said, I smell a rat.
Yeah, something's not.
And guys, obviously, they're saying discerning the Holy Spirit, discerning your spirit, man. If you're a Christian, obviously Dave Ramsey is a Christian, and I believe in that 100%. You got to discern, man, the person you're sitting down with, do they have your best interests at heart? And at the end of the day, guys, outside of the Holy Spirit, outside of your conscience, outside of that spirit, man, telling you this is wrong or right for me, that gut feeling you get, look at the numbers. I'm going to challenge you, look at the numbers. If you're buying life insurance, you're considering buying an IUL, you've seen infinite banking, you've seen the pros, the cons, you're comparing videos, sit down with a professional that can properly structure a policy for you, can decrease your cost of insurance down to the IRS legal amount to maximize wealth building so that policy works better for you. Because in a nutshell, guys, this is how it really works. An IUL takes your cost of insurance and keeps it low in early years. If you can fund that policy correctly and maximize that bad boy, here's what happens. You're on the right side of the coin, because now that compounding growth tied to the performance of the S&P 500, which me, Dave, we all agree will always grow, you can't lose. So guys, with that being said, man, if this video piqued your interest at all, if you have any questions, you're looking for life insurance yourself, but you have any comments, guys, comment in the comment section below. I'll answer any question, guys. Until next time, follow us on Instagram at SoldOutServant and subscribe to the channel here at Serve to Earn. God bless.